We are back with John Zechner, chairman and founder of Zechner Associates. John, you are still positive on gold, and obviously a weak US dollar. It's hit its lowest since April of 2022 today. That adds to the case for buying bullion.
Yeah, Andy, and I know Citi came out with this sort of well telegraphed call about a week or two ago about why they thought 25 to 2,700 gold for next year. I'd argue a little bit on that because I don't at a lot. I think gold will hold here or continue to go higher. Now you mentioned the U.S. dollar, and that's the biggest thing. It's a diversification of reserves by the global central banks. That's the biggest thing. These are long-term buyers, and when you look at the holdings of gold, I mean the U.S. has by far the largest. And then, Germany's further down the list. But, the major Eastern central banks, you look at China, Japan, India, they are starting to increase the reserves of gold. It has now surpassed the euro as the second biggest holding next to the U.S. dollar. And I mean, given what's going on in the U.S., I can only see that going further. And gold is so small in that grand structure, it's not going to take much, to continue to move the price higher. And so, it's not a supply issue or anything like that. Even investor demand will, may tail off a little bit, or jewelry demand. But I think these central banks are massive buyers. That will continue. They have to diversify their currency holdings, probably out of fiat currencies in general. So everyone says, well, how about digital, cryptocurrencies, Bitcoin, and all that? Well, maybe at some point. I have yet to see a major central bank or even a mid-level central bank start to embrace Bitcoin or cryptocurrencies in general as one of their holdings. In most cases, that have to be an act of Parliament or Congress or whatever. So it would be a massive change. In the meantime, they can buy gold. I think they will continue to do it. And the gold stocks are still at multi-decade relative lows. So you're not paying for 3,300 gold. I think if you sort of normalize gold stock valuations to historical averages, I'd say right now you're sort of paying for $2,000 to $2,400 gold. That gives you a lot of protection on the downside, and the companies are certainly acting more in a shareholder-friendly manner lately. I think that will continue, spending a little bit more time sort of looking at returning money to shareholders as opposed to necessarily just growing for the sake of growing.
One stock, one stock you like the look of, John, is Torex Gold, TXG, Mexico's biggest producer.
Yeah, we've held it for a while now. It's actually started to do really well in the past year. I mean, in the big Morales property in Mexico, they had the largest single mine there, and the El Limon mine. But the problem was, it's got a low valuation because they're running out of the existing open pit. It's running down. They're going to have to sort of roll it off. So people were, you're not paying much for future growth. But on that same property to the south of it, they had a property called Media Luna, and they've been able to bring the Media Luna online to replace this almost seamlessly in the past year, right on budget, right on time, which is, as you know, Andy, almost unheard of in mining.
Yes.
At the same time, you've gone underground at El Limon as well as Media Luna, and that's going to extend the reserves a little bit further. So it looks like a great property, and where they've gone underground as well, it looks like it's about a 25 to 30% of the periphery is copper as well. So you're going to have a good copper yield from the same property, and it's still trading at discount to net asset value and a lower than group price to cash flow multiple.
I'm not sure if you saw Tuesday on Commodities, we interviewed Jody Kozenko, the CEO of the company.
Did you? Yeah.
People can watch that at BNN Bloomberg .ca. John, another stock you are watching, I think you like it, is Salesforce, CRM, and they are seen as possibly a major winner from AI.
Yeah, we've we've still got overweight technology, or maybe not overweight to U.S. indices, but we've just got a solid weighting in technology because the growth continues there. But I'm more looking for names where the valuations aren't under control and where they're more going to be a beneficiary of AI. And all of the software stocks got hit. The SaaS, software as a service, they got hit earlier in the year because the view that AI is going to sort of bypass them and the need to have any of these software manufacturers, software providers in place. And I think with Salesforce and some of the other software providers are starting to demonstrate that no, they can incorporate AI more into their product offerings and applications and other things and sort of sell that into their very large client base better than anybody else, and they can do it more efficiently and more quickly. And then you look at somebody like, Agent Force, you've seen the advertisements on TV with Matthew McConaughey, sort of, doing all these things. And yeah, I don't know, they'll get it. But I think right now you're getting the stock at a discounted valuation, about 25 times forward earnings, which in tech world is not bad for a growing company. So yeah, we continue to hold a lot of different tech positions, but rather than the chip stocks, which have had a great run, and the infrastructure and the building, and I worry a little bit even on the search side, a name like Salesforce or some of the other software manufacturers, software providers, I think are providing interesting is like Shopify or Lightspeed up here, or names like that.